got some good stuff going on, and he's going to show you guys how to invest in, the major project, multi-million-dollar deal that he has going on. So, just stay tuned for that. He'll be on here shortly. Bring him in, and then at the end we'll just kind of answer some questions for you guys. So, what's up, Bree? What's up? Got all my folks coming in, showing house buying sweet, showing support. Appreciate that. Appreciate the love. Hopefully we get to at the end we get to answer, any questions you guys have. Try to answer as many as we can. But got my boy James online. Oh, there we go. All right, let me figure this out. He's gonna request me. All right, Chris. Let's see. There we go. I requested you, Chris. There you go.
What's going on,
There
bro?
we go. What's up?
Nothing much is going on. What's going on?
Hey man. I appreciate you doing this, taking the time to show a little fish how to do how to do it the big fish way, man. So
far from a little fish, bro. You far from a little fish. You're modest.
man. Okay. So obviously we chatted briefly the other day, man. Now we really get into it.
Right.
We'll wait until it kind of comes on. I guess the follows get up for the most part. But if you want to start with basically what's going on with you right now. We all quarantined. We all locked in the house. I'm sure you got projects going on, so you're still getting out a little bit, right?
Yeah,
so
that's pretty
much
much
in your world.
The only reason I'm getting out, man, is to go out and check on the projects. Keeping that 6 foot separation,
Social distances, right?
Yeah, man. So luckily, real estate was considered essential here in Houston, so all the projects can continue. New construction starting on Monday for the second phase of the redevelopment project.
Okay.
Yeah, man, and the project we're talking about today, they're doing a lot of the deferred maintenance, a lot of things that the last landlords either didn't have the money to take care of or didn't take time to take care of, So I got my army out there, man, getting things done.
You have most of your guys are like obviously contract or whatever. You have a lot of W-2 employees.
I don't have any W-2 employees.
Okay, that's
cool. I don't have any W-2 employees, man. So for a lot of people, I've been investing for 13 years now, right? And a lot of people do decide to take a lot of things in-house and hire their own crews. But my motto always worked better with me being as lean as possible, because when you try to take on all that work yourself and you want to GC your own projects, number one, you put all the liability on yourself, right? So if the subs mess up, that's on you. I'd rather give up that extra 10%, have all of my time free, have zero liability for things, and still be able to go and pursue other deals where the return is a lot bigger than that 10%. So that's what I do. I use GCs for all of my stuff, man, and it just works for me. I 1099 everybody.
So you're using GCs. I mean, we'll get into the project, but you're using GCs. But how often are you there specifically?
I still pass by every day.
Okay.
I still pass by every day, just check in to make sure, because a GC is still a manager, right? And an employee still will take a shortcut if they can. So you got the GC, you got the subcontractor, you got his laborers, and so I'm still there to make sure the laborers are doing their job. But at least if I see something wrong, I can delegate the responsibility. I don't have to stay there all day and micromanage to make sure it gets fixed.
Right. That's what's up, man. So you definitely have to manage and oversee them, make sure they're using the proper wood, proper sheetrock, make sure they're showing up to the job on time, all that good stuff. So, well, let's go ahead and get into it, man. You want to go ahead and introduce yourself first, and and then I'll go ahead and tell the folks who I am, and go from there.
Yeah, man. So I'm Chris Senegal. I've been in Houston since 2008. Been a real estate investor since 2008 when I moved here. My background is engineering. I went to Southern University, got in the corporate world, didn't really like it, decided I needed to do something bigger and better for myself, for my family, and for my legacy. So real estate was the route I chose. A teenage dad. I got a lot of excuses. Only sibling to even graduate from high school straight up, a couple of my siblings got GEDs. My brother's been incarcerated since he was 15. So typical family, nothing extraordinary, didn't come from a silver spoon. but just decided to be persistent and be purposeful with what I do going forward. And so I'm here now doing redevelopment projects, buying entire rental portfolios and allowing other people to invest with me on the projects.
I mean, say entire rental portfolios. Wow. It's a little modest. It's a little modest. Just a little bit. So obviously, Chris, I know you for a little bit, and I see, just you're a trendsetter, trailblazer. In my eyes, man. You're doing big things as far as a development project in hot areas. First of all, I mean, you're getting to talking about the area and why you chose that location and everything, but you're doing development in a hot area. I haven't seen, a lot of folks doing, and I'm sure there are, but I mean, I haven't seen a lot of folks, especially like us, doing crowdfunding, on something like that. So then you'll get into crowdfunding. But, for me, I consider myself an entrepreneur. Of course, I'm heavily invested in real estate. I'm an owner of Home Buyers Texas. I also have a business partner, Robert Destin. And we obviously that primarily focuses on wholesaling. We also do renovations, flips. We buy and hold. So, and also I'm a private investor. So you guys have projects, short-term projects that you need lending on. I'll look at the project and possibly we can partner on a deal. So I consider, I'm in a variety of different industries, but primarily my day-to-day focus is real estate. So let's get into it, man. I mean, I'm excited about this. I've been kind of waiting, to tell us a little bit about your project and what you got going on in Fifth Ward.
Yeah. All right. So my first project over Fifth Ward was a new construction project where I took a block that was full of drugs and prostitution, basically, like literally. Neighbors, the whole block, owner financed it in 2013. Kind of unique situation where the owner had inherited it from his dad, and he owned it free and clear. And I was able to negotiate a seller financing deal with them. So I was able to pick up the whole block, giving them 10% down. And it had cash flow already because I was running, well, he had a few tenants, but I added single room occupancy to it for like parolees that wouldn't have anywhere else to live, man. So I let it cash flow for itself because I bought it in 2013, had no idea what I was going to do with it, but it had views of downtown. It's right on Highway 59. It's a whole block. I'm like, yeah, this is going to be something one day. Just watch it.
So Chris, interrupt you real quick. So did you know, like, obviously when you had cash flow, so you already could pay the note already, right? So you paid the note already, and you already had views of downtown, but you didn't really anticipate what you were doing now, right?
No. In 2013, I thought maybe I would hold it for a few years and just flip it to a developer or flip it to somebody else, as the value appreciated.
You were in the flip thing. You didn't want to
keep it. Right.
Okay.
Okay. I had no idea, man. But after about 2 years into it, it just so happened that less than a mile away, the developers that built City Center bought 150 acres right there. And they said their plan was to build another City Center right there. So I'm like, okay. So this calculated risk paid off because they bought that same property in the south end of Fifth Ward for the same reason I bought mine, because it had views of downtown. It was right next to downtown. So that bet kind of paid off. So what I did with that project was new construction, because my first goal was, especially when it comes to us dealing with gentrification and redevelopment, we always think about when stuff starts to revitalize, we think about only protecting the people that are still there, right? But we forget about the fact that there's a lot of us that are from those neighborhoods that actually went to college, actually got good jobs, actually did something with their lives, and there's no option for them to move back to the neighborhood at all. So that means the neighborhood has a very suppressed income because it's only the low income people, and that's all we're thinking about. So my goal was to build something nicer to bring those people back from the suburbs back into the neighborhood, right? And so that model has been working. I built and sold the first 3 young Black working professionals that work downtown, 2 single people and a 1 married couple with a baby. So it's looking good. We're getting ready to start construction on 2 more. But the next question people always have is like, but how do you protect the people that are there? We see you bringing in new stuff. What happens to the people that are still there? So for me, it was like, okay, the biggest way to secure big groups of them is to find rental portfolios and find tired landlords that are ready to retire, because their portfolios are going to be hot commodities because it's next to what's being gentrified and what's being revitalized. So if we can get to them before those other developers get to them and purchase those those groups of properties, we protect every single one of those tenants from being displaced, right?
How do you find this group of people?
Man, same thing we do with other wholesaling. You know, this one came about by calling an absentee owner list.
Okay.
You know, you just pull the tax roll, looking at the address of the property, and noticing that the owner's address is something different, and just mailing to them. I didn't actually find this myself. One of my students found it. So my students just drove by one of the properties, and wrote the address down, called the seller, and the seller's like, well, actually, I have this whole portfolio that I'm selling. It's not just that house. Right. And so he brought it to me, and he's like, Chris, can you help me sell this? And I looked at it, and I'm like, no, we're gonna keep this one.
You got that light bulb went off. Okay.
Yeah, I said we're gonna keep this one. We're gonna keep this one, man.
I mean, that's sometimes it happens, Chris. Like you know, you'll run across a property. You have no idea what you're gonna do with it, but you know it's a good buy.
Right.
You know it's a good buy, it's a good deal, and it makes sense. And sometimes you just got to figure out a way to pay for it.
Right.
Cool, man.
Somebody asked a question I want to answer right now. It says, how do you mitigate the risk? How do you mitigate the risk in those areas? High crime, break-in, burglary, squatters, in order to protect your investment. So you're not going to buy in a war zone. You're going to buy in an area where you already see some signs of revitalization. With that big mixed-use development that the same city center people are building in Fifth Ward, there's already more exposure to the neighborhood. The city council, everybody's invested in making sure this project works. So there's already more police patrol. There's already that kind of stuff there. But if you ever notice, when you go into other neighborhoods that are under that revitalization trend, we ourselves, even though most of the residents there look like us, we are more scared to move into those neighborhoods than other people. While we're still calling it the hood and saying the crime is too high, you see somebody else walking their dog and riding their bike, right? And so we got to start thinking differently. We got to start realizing the opportunity is investing before it becomes polished, while it's still a little rough, because that's where the big upside is.
See the long-term vision.
Yeah, you gotta see the long-term vision. You gotta see the long-term vision. Yeah. So where was I with this? Okay. So the project came to the table. I started looking at the numbers. Some of the tenants been there 19, 20 years, man, and they weren't going anywhere. And it was enough cash flow coming from it already, like $12,000 a month, where it made sense for me to be able to take it on and kind of do similar to what I did with the first block, right? Because I could own the finances from the seller, and it's already generated enough revenue to pay for itself, right?
Okay, right.
Right. So, but the deal got even better than that. As I started talking to the owners, they didn't want to take like 10% down like the first people. They had plans for the money already. They wanted to buy another house. They wanted to do some things, and they were ready just to retire altogether. So They told me I had to bring at least 50% to closing. So I started thinking about it, and I was like, well, I had been looking at the opportunity to do a crowdfund before. I thought about doing it on the new construction, but it's too risky, because on the new construction, I was the first to build new houses in that zip code. So I had in my mind what I thought it was going to appraise for and what they would sell for, but I didn't know for sure, and so for me to take other people's money on it and risk it like that, and then the first appraisal come back really low because the appraiser wanted to be a dick or something, that would have been everybody else's money on the table. So I put that on ice, and I was like, eventually the right project is going to come about for me to do the crowdfund. And then this one came about. And so, that's what I did. And then when I told the sellers what my goal was, I was like, look, I really want to crowdfund this. I really want to set an example for what can be done in these communities. They bought in completely, man. So they allowed me to give them 50% in closing, and I don't make any payments for 2 years. So I got 2 years where I can take all of the cash flow, reinvest it back in the property, pay out dividends to the shareholders. And then at the end of the 2 years, I'll have enough documented accounting records and tax returns to go refinance and pay them off for the other 50% that I got from them. Yeah.
Wow.
Yeah.
And this was the deal you closed last month, right?
Right. Yeah. That's the buy the block deal. Yeah.
Wow, man.
Yeah.
Okay. So explain crowdfunding, man. How can we get involved?
So crowdfunding is simple. So crowdfunding has actually been around for a long time. They've used bigger, fancier words for it, like syndication. But it used to be where only wealthy people could pool their money together and jointly invest in real estate acquisitions. So you had to be what's called accredited. So accredited investor means your net worth is over $1 million a year, or you've made over $200,000 a year individually for the past 2 years. So that eliminated 99% of us from ever being able to get involved in these things before. But when Barack Obama was in office, he passed something called the Jobs Act. And part of the Jobs Act was allowing everybody to be able to invest in these projects up to a certain percentage of your income. So up to $10,000. So yeah, basically that's what a crowdfund is. A crowdfund is you are looking at a big project and you're investing a small portion in it. And what you get in return is shares, just like you would get shares of a company. When you buy stocks on the stock market, you actually get shares of ownership in the actual investment, the actual real estate. So everybody that buys a share, each $50 share, you own a micro portion of that asset. And so as the value of the property goes up, as the rental income goes up, your share value goes up, and the dividends that get paid out go up.
Right, as it appreciates.
As it appreciates, right.
So how is that secured? Like you have a certain insurance, or is it secured by the real estate?
It's secured by the real estate, right? It's backed by the real estate. So they actually, like I said, they actually own a portion of the real estate. They're actually buying equity in the LLC that owns the property, right?
Okay. Okay. So whatever comes, whether it's more cash flow as far as rental goes, or more equity, you know,
both.
And so when are you? What's the plan to like cash out of this? Is it like 5 years or?
Yeah, good question. Good question. I don't plan on ever cashing out of it, but what I put in place for the investors is every year I'm going to do an appraisal on a property, and as the property value continues to increase, I'm going to notify all the shareholders of what the new value is. So the property value went up 10%. You bought your shares at $50. Now they're worth $55 a piece. If you want to sell, the LLC will buy the shares back from you at $55. So now you cash in and you get your profit. Or you choose to stay in and continue to let your share value grow, right?
It makes sense to stay in.
It makes sense to stay in unless you got a reason to cash out or you want to get into something else. I mean, you know, people sell stocks all the time when they're still going up, you know, but, you know, people have personal decisions.
Now tell me, that's phenomenal, Chris. I mean, so tell me, you know, and obviously I live in Houston, so I know the area. But maybe it's a few people on here that don't know Fifth Ward, don't know the area. Tell them what they invested in.
Okay, so Fifth Ward right now. So if you look at Houston on the map, Fifth Ward is the last quadrant around downtown that has not been redeveloped yet. It's actually the closest quadrant to the Astro Stadium, to the Rockets Arena, everything, right by George R. Brown Convention Center. Like 5 minutes from downtown, you're at any one of those sites.
Right.
And so it's the last quadrant to be redeveloped. And then the redevelopment is starting now. If you look at any other area of the city that was redeveloped that's close to downtown, or you look at the area where the other city center development is built, the property values quadrupled easily. You could buy a lot before the redevelopment for $25,000, $30,000. Some of those neighborhoods you can't buy a lot now for less than $250,000, and that's just the land. So the property value. So now the houses are, there used to be $80,000 to $120,000 in those neighborhoods, are now 300 starting out all the way up to over $1 million. So this is the same thing is literally happening in Fifth Ward right now. It's not somebody else coming in speculative. It's somebody that's already done it in Houston, about to do it again at a better site, because they took what they did far west of Houston and they're about to do it right by downtown now. So, and it's on the water too. So it's going to be on Buffalo Bayou. It's going to be crazy. So this is one of those opportunities where if we're riding through there right now and we see it's still kind of rough and we're concerned about crime, by the time we ride back through there and everything looks nice, it's going to be too late, because everybody else will have bought everything. The property values will have shot up and everything. And so all of my projects that I'm doing in Fifth Ward are within a 1 mile radius of that big mixed use development. So that creates a natural driver for value appreciation, for the demand for your land and your location to go up, right? So all of my buyers on my new construction, they're going to have property value appreciation. You know, this portfolio, we don't have to worry about doing like what a lot of landlords do when they buy rental properties that could be fixed up. The first thing they do is they go and they invest a whole lot of money in fixing them up, and then they raise the rents a lot to recoup that additional investment. With this, we don't have to do that because it's bringing in good cash flow already. And the land value alone is going to accelerate really, really quickly versus buying something in the suburbs where your appreciation may be 2 or 3% a year. So yeah, Fifth Ward is like really the hottest market in Houston right there. If you're from Houston and you know about the Heights, there's a Houston Chronicle article where they really literally call Fifth Ward the new Heights.
The new Heights.
The new
Yeah.
heights, yeah.
So what's crazy, man, is I live in the historic heights. So and I think I don't know. Back in the day, I hear rumors, that it was just like Fifth Ward, really.
Oh, it was. It was, yeah.
And right now you can't get. I think one of the smaller lots here is probably like 400 grand minimum, 450 grand to 500 grand minimum.
Yeah.
So, and I think that's probably going to be similar to your case. And on the other side Fifth Ward, close to across navigation,
Edo.
Edo.
Yeah, yeah.
Edo. So, and I have a townhomes over there,
right,
which is minimum 300 grand.
Yeah.
So, so I'm. This is a certain, this is definitely a certain area that is going to increase in value. It's a hot area. So, is there, is it just because you came across that deal, or like beyond this project, are you looking for other specific hot areas around downtown, or what's the future plan?
Well, I mean, like you said, you talk about the heights. The heights are still going right now, and it started in like 1999, 2000. So Fifth Ward is going to be my anchor. I'm going to continue to do projects there.
Okay.
Yeah. So I really like the market, and it's the last opportunity, that we have to be actively involved in the entire revitalization process from start to finish. And yeah, so I mean, if we continue to do projects, continue to leverage these projects into bigger projects, maybe we could be doing our own. Well, my goal is definitely to do a mixed-use commercial residential development in Fifth Ward that we can collectively all say that we own and we control. Yeah.
So, Chris, if folks invest in they invest in this project, right? At pennies, $1 million project at pennies.
Yeah.
Are they investing in everything that you do, or are they investing in just this specific project?
Right now, this one is just this specific project, which is the Lyons Avenue rental portfolio. The actual name of the community is Dittman Court. So it's 18 houses. It's 6 2-bedroom houses. It's 18 1-bedroom houses. It is 2 commercial buildings. One has a barbecue restaurant. One has a vacant space that we're going to be putting a coffee shop in, and a breakfast spot, because there is none in Fifth Ward. And I'm actually working with an entrepreneur who he's African American, but he has a coffee shop in the Heights called Throughgood, and so he's going to put that on. Pastor Rudy, And then the other building, I'm gonna tear that building down and do something new there. We're gonna build some type of Class A small office complex, maybe shared office space. I'm not really sure yet, but we're going to figure out something nice to do with that to increase the revenue. So, I talked about earlier about not having to increase the rents on the tenants because most of them are on fixed incomes. And I talked about, the value appreciation of the land. Well, the third way that we're going to increase the value of the project is by adding the new commercial, because, for commercial, you can easily charge $1, $2 per square foot for commercial space. So every time we add onto that property, every vacant 1,000 square foot space we add, that's $12,000 revenue per year that we're adding minimum, right? So that greatly increases the revenue and the value of the property.
Okay, value of the property. Okay, so as far as obviously I live in the Heights. That's Fifth Ward. It's buy back the block, but you wanna buy the whole the whole area, right?
Yeah, I mean, it starts. It's one block at a time, basically. Yeah, one block at a time, and just be able to create a new model for how we can control. Like I said, make this the blueprint for how we control gentrification or revitalization, or at least participate in it and control certain segments of it as much as we can.
Okay, and are you getting a lot of response from, like you said, the folks that used to live in the neighborhood, right? They're coming back to buy. Are you specific? How are you specifically marketing to those folks that used to live in the neighborhood, or the folks that come back?
Yeah. So
because these aren't cheap. I mean, they're probably 300 and up, right?
Well, so that's another good point. I could have started them in the 300s, and I know they would have sold, but that would have priced them out of affordability for a lot of the young working professionals. So I priced them a little bit lower on purpose, right? So I kept them under 300. So my first phase, I sold them at 279, right? So the first three, 279, right? And the goal was to make sure that I get more young African American or minority working professionals back in there, which has come to fruition. Now collectively, what's going to happen is everybody that buys, they're going to have a higher income as the years go on, and as they have higher incomes, that makes the neighborhood look better and makes the neighborhood more attractive overall for retail, for everything. So my goal was to get them back, and make them feel like if the money they spend here is the same amount of money they would have spent in the suburbs, but where they're at is much more convenient and a much better proximity and has a lot more upside for them in being in the city and being so close to downtown.
Okay. So what's the buy-in?
For the okay,
how much
yeah,
is gonna cost?
yes, okay. So for the crowdfund, I broke it up into $50 shares,
Right.
and the minimum is buying 5 shares. So your minimum investment is only $250. So for $250, you literally can say you own a piece of this.
5 shares, right?
5 shares, yeah. Oh man, you know what? Then I'm thinking about. I really didn't answer your question. Your question was how are the existing residents feeling about this? They're ecstatic. They're ecstatic because they're used to seeing new things come to the area. They're used to seeing people buy things up, and it doesn't. The people don't look like them, and the people that come in have a different motive, a different agenda. But for them to see somebody that's really focused on, maintaining the heritage of the neighborhood, but bringing it back to life at the same time, they really buy into that. So for your $250, you are literally buying into that mission. You're buying into that goal. It's not charity. You're not donating me no money. You are investing, and you're getting a return on your investment at the same time.
Okay. So as far as they're not concerned about their taxes going up because you're building, a lot, your obviously your projects are valued more than their home, the typical average home in the area. So they're not concerned about that, or not
that's the trifecta of gentrification. You're right. So now that I figured out that we can bring the working professional back in to bring the income up, I figured out how to protect the residents that are not homeowners, but they're just renters. We're protecting them. The third one is the long-term home ownership. So that one takes a political push. There are cities like Philadelphia, like Baltimore, where in the neighborhoods that are gentrifying, there is the county and the city implements tax exemptions for anyone that's a senior that owns a property or anyone that's owned their home for longer than 10 years in that neighborhood. So then those people no longer get affected by that. So that is the next initiative for to get with the new city councilman whenever they get elected. There's a runoff right now. But the next city councilman is to get that on the dockets and try to get that implemented, because if we can do that, then we really protect everyone all the way around that has a vested interest in that neighborhood.
Right. Okay. So the scope of this particular project, right now you got 3 townhomes as commercial buildings. So, but when it's all said and done, how many townhomes are you going to have on that block? Block.
14.
14 townhomes.
14 townhomes on the one
14 block. Townhomes within the next year?
Yeah, within the next year.
Within the next year. Okay. So for $250, I got 5 shares of a multi-million-dollar project.
Right.
That's crazy. That's crazy, man. I'm not, and I'm new to crowdfunding overall. I'm familiar with pilots.
No one is.
Man. You bring money together, get food.
Yeah. Honestly, no one's really done it like with the structure that I have. Everybody knows about the big Tulsa real estate fund, but his model was different.
What's the difference between you and Jay Morrison's?
Well, Jay Morrison did more of the traditional. Basically, he created like a hedge fund, right? Where like with a hedge fund, you invest money in them, and then they make decisions on what to do with the money. So they charge fees for managing the fund, whether the fund really makes money or not, right? Or they can invest in things that don't actually have cash flow yet, and you have no visibility to that.
And you continuously charge the fee.
You charge the fee and
money.
Yeah. And they there'll be something on paper that says they owe you this minimum rate of return every year, but it's just accruing, And so until they get enough projects that actually make enough money to pay that out, you don't really see anything come to fruition. So I'm not that bold. For me, it was like, I got to find a project that's already cash flowing, that's already bringing in revenue.
Right.
So that when people invest with me, they're making money from the first day.
Okay. So how, obviously making money for the first day, but you mean, I guess you pay out quarterly or is it like, is it quarterly?
It's biannual, twice a year.
Twice a year, okay.
So that payout is different from the share value growing up. I'm taking 40% of the net rental profit. So after all of the bills are paid, taxes are paid, insurance is paid, I'm taking whatever's left, the net, and 40% of that is divided up amongst all the shares and paid out to shareholders.
Okay. And how many shareholders are you looking to, I'm sorry, you froze, bro.
Yeah.
Say again,
yes,
you froze.
Yeah, I'm sorry. It's 21,000 shares in total.
21,000
shares. It's 21,000 shares in total.
Oh, in total. Okay. Yeah. And then I mean, is there a certain time frame you looking for that to be done? Or is just
we got about 60 days left on the opening for the crowdfund. Yeah.
Okay. And where are you at?
Right now we've raised about 280,000.
Okay. So we got a little ways to go. So you guys, if having invested in real estate, obviously I can attest. He can attest for the crowdfund, but I can attest to just real estate in general. Everything I have, everything I'm invested in, everything I am is pretty much because of a real estate deal, a commercial real estate deal, which is kind of similar to what this is. You know what I'm saying? So to grab a part of a project that's in a hot area, that's currently in development, and it's by navigation is kind of like going to be like the Riverwalk in San Antonio, right? Where you got all these commercial restaurants, right? All this this high dollar real estate, and it's high dollar real estate all around this. So probably within the next 2 to 5 years is you can't really just buy in at a reasonable price, right? The only way you can do it is something like this. Right. So definitely, if you guys are interested in real estate, without having to do any physical work or anything, this is the proper way to go. Yeah. So, I mean, that's phenomenal, man. So how is the quarantine and everything? Is it slowing down the project or
a little bit, a little bit, because I wanted to be able to get the architects out there to start getting plans together for the commercial side to get that space revamped and get the permits and stuff started. But all that's on ice right now. Of course, the guy that has the restaurant, he can't operate right now. So he still does to-go stuff, but his volumes went down a lot. As far as the tenants, a lot of my tenants are already on fixed income, so some of them were employed. I've only had 2 or 3 that haven't been able to pay. We're working with them on that, because we understand the situation. Right. But other than that, man, nothing really negative has impacted the project.
So Chris, after you say this project is done, you have a lot of tenants that's been there for a number of years. So are you increasing rents on them?
No.
Like how are you able to do that? It's sustained.
So the beautiful thing about this is it's a blend. It's not just residential, it's commercial. And there's so much upside on the commercial that I mean we can bring another $6,000 to $7,000 a month off the commercial without having to touch their rents. Right. And that's something that most investors can't figure out, or most people don't like about when you buy in neighborhoods like this, because most investors feel like they have to raise their rents. There's a stable level of return that you can make without being greedy, right? And we're making a great level of return right now without being greedy, so we don't have to do that. Like I said, commercial is where the upside is, and the value appreciation is where the upside is.
Man, that's what I like about you, man. Always looking out for the little guy.
Yeah. I mean, at some point, somebody has to create a model that shows that,
Right. I mean, and that's true. But as me, just as an investor, I want to know how I can go in and improve situation. That way, I can increase rents. Right.
And here's another thing too. If you think long term about it, eventually these tenants will transition, right? And then once they transition, then you can go in and renovate the property, and then you can increase the rents then. But you can say you worked in good faith and with integrity and ethics, and you did not displace any of them, right? You didn't price them out of the market. So there's still a long-term upside there, but it doesn't have to be immediate.
Okay. Long-term, meaning like most of these current tenants, they're obviously it's not a new business. So the possibility of them even transitioning out to something else within the next 5 to 10 years is realistic.
Yeah. 10 years is very realistic. Yeah.
Okay. So I mean, how do people go to find out more information about this, and and to actually get a piece of it?
Man, so you can go to my profile, investors at the top, and click the link in my bio. And this is the first one. It's gonna say buy the block, or you can go to buytheblock.com and you'll see the project on there as well. Really simple. Try to make it easy for everybody to find.
Chris, is someone how can I pin that, man? You know I'm new to this. This is my first one.
Okay. Let's see. Oh, I think, let me see. I don't know if I can type it, but you can type it. I think
Okay.
Let me see.
Buy the block, yeah.
Yeah, type it, and then it'll scroll up, and you got to put your thumb on it, and then pin it at the bottom. Buytheblock.com.
All right, man. Post. It's buytheblock.com. There you go. All right, cool. Yeah. That's what's up, man. I'm learning this, guys. You know, buytheblock.com, and you can get all the information. Are there any management fees? I know you said Morrison had management fees, but there are no fees to it.
No additional fees to the investors. No, because they're actually buying equity shares. You know, there's no extra decisions for me to make. The management fees is usually you got to pay for the time of the people that are actually actively managing the fund, finding the deals, finding this, finding that. We don't have that. Built into our operating expenses is property management fees. So this you know, it's completely different.
So you really work the numbers. So based on this, and obviously, you know, there's a number of different ways to invest. Why did you choose crowdfunding?
Really just to create the blueprint, bro, for this model, because this was a project that I felt like it could really work on. Now let me be clear. This is not something where I'm asking people to invest money so that I can close on it. It's already
we know you already done it.
Yeah, I'm looking at some of the comments. So I'm addressing that. So I already own it. I had a private investor who sold an oil and gas company, and he was literally going to give me the entire $600,000 I needed to close on it, right? But for me, it was like, okay, this is an opportunity for me to, if I'm going to pay that rate of return to him, I will prefer to open it up and let other people buy in, because it's not about me getting rich off of every single thing. It's about me creating a blueprint, a model to show other people that you don't have to have a lot of money. You can collectively do these things together. And that was my whole point for doing a project like this.
Hey, listen, folks, if you've never invested in anything, you know, real estate, you know, everybody I know that has money or have a little bit of money, a lot of money, or on their way to making money in some way invested in real estate. Mm-hmm. You know, this is like a new age way of doing it. You know what I'm saying? And you know, I wish I had the opportunity 5-10 years ago to get into some type of commercial stuff. Mm-hmm. You know what I'm saying? And that's exactly what this is, especially in a hot area. Mm-hmm. You know, we foresee a lot of different things. Of course, we pay attention to what's going on in the market. You know, actually mentioning the market, how are you feeling about the market right now?
Well, okay.
Real estate overall, because I know you do other things other than this project.
Right. Yeah. So, you know, I started in 2008 in the housing recession. So this has reminded me a lot of that. What I remember about 2008 in Houston is that although other cities were impacted tremendously, Houston was pretty stable. We didn't have the big value appreciation that other areas had, where they had the big drop. There was no need for a huge market correction. And the market overall, of course, there is going to be a reset. Some property values are going to go down, but that's more so in the areas where you got the high end values. The reason why I like Fifth Ward still right now is because it's still way below the market value that it's going to have in a few years. So there's still tons of upside there. For people that are just looking to get into investing in general, if you're not looking to be a part of one of these projects, I would say buy in Fifth Ward, buy in Sunnyside areas like that. Hot areas where there's still going to be long-term demand. Houston is kind of unique, where we got the medical center and all that kind of stuff, right? So as other areas are down, there's still going to be housing demand for all the working professionals that have anything to do with the oil and gas or the healthcare industry. So that's just me talking about the local market, really. But yeah. Mm-hmm.
So what's the 5-year plan, Chris? I mean, you know, obviously you want to buy as many blocks as you can, you know, in the Fifth Ward area. But do you plan on doing this throughout the states, or what's up?
Yeah, man, wherever the opportunity presents itself. I actually already own a bunch of property in Baton Rouge, Louisiana, that I'm going to be doing a project in this very similar neighborhood to Fifth Ward, right by Southern University.
Same platform?
Probably so. To be a similar structure. I'm not really sure exactly how that one's going to pan out. It really depends on what the final opportunity is, you know.
Okay.
Yeah.
Okay. Okay. Now I know, you know, just a little bit outside of real estate, you know, I know you got an older son. Is he following in your footsteps? You got a mentoring program that he's a part of, or you know, it's just dad following in son following in dad's footsteps?
Man, you know, right now, I mean, he's going to college. He's going
Okay.
to University of Houston. It's a 5-year MBA program with an entrepreneurship master's degree.
Right.
He's going for finance though, so that can be tied into real estate. That can be tied into all business specifically. So I'm not really pushing him to take over the family business, quote unquote. But the goal is by that time to have the company running with the CEO, with the president, with the board of directors, so he can inherit the company and he can do whatever he wants to do. You know,
makes sense.
Yeah.
I saw somebody ask about a mentor program. I know you actually do something like that, right?
I do. Yeah.
Explain that a little bit.
So I have 2 levels. So the first level I have is just like if you just want to figure out how to get into real estate and you don't know where to start, I have a $37 a month program where it's just like a living library of like, it'll be like all the recordings like this. It'll be good reference materials that I found that I think are valuable. Somebody's trying to figure out where they want to go. It'll be excerpts from my one-on-one program or my small group mentorship. And that's just $37 a month. And, you know, you learn at your own pace. And, you know, you can get discounts on one-on-one consultations as you go. And then I have a more robust small group mentorship where it's $1,500 to get into the program. And then after that, I just basically give you everything. You get all my resources, you get all my connections, my actual title company, my actual contractors, my actual real estate team that does all my valuations for my properties. And I bring in guest speakers to talk about different topics. And I help everybody do deals. And some people are wholesalers, some people are investors. But some people just want to own rental properties. They don't want to be fix and flip. So everybody's in one group, so you all learn from each other. We get together once a week, and we talk about the deals that everybody's doing. So everybody learns from other people's experience and the successful closing deals, the ones that haven't closed. And so that's my main program. But that's the 2 that I do. I don't do a whole lot of one-on-one because it just takes so much time.
Right.
You know. But
so much going on.
Yeah. So those 2 models are what works for me. And you can just go
$37. $37. Come on, man. To work with a real big time investor. Come on, man. Where is that happening at? Hey, somebody asked a question, man. Mello 347. You know, how you plan to keep investors posted on the project?
Oh, so there is a platform and a portal where every shareholder will get monthly updates, and we'll do quarterly live meetings with Q&A, so you can know what's going on. And plus, I'm gonna have it on my social media as usual. So you know, it'll be several ways for you to find out information on the status of everything. Okay,
can we buy additional shares over time?
Yes. So in the initial funding round, as long as the campaign is open for you to invest, which will probably be another 2 months or so, or a little bit less, you can buy shares.
60 days, right?
Yeah, 60 days left. Once that closes, the only time you can buy shares is once a year after that. When I have that open period where I'm buying shares back from the other investors, then at that point in time, we can resell shares to other people.
But now the shares aren't going to be worth the same. They're going to be higher.
Yeah, they're going to cost more by then. Yeah, definitely going to cost more.
You want to invest now. You know, what's the link to the mentoring program? As someone said, sign up.
Learnfromchris.com. Real easy.
That's easy.
Yeah. Learnfromchris.com. Yeah.
That's easy, man. I don't even have to post that.
Nah.
Is there a monthly fee after the $1,500? What's $1,500? Someone said.
That's a small group. No monthly fee. We just split the profits on the first couple of deals we do, and that keeps ownership on everybody. Some people charge you $5-10 grand to teach you individually, and then you're off on your own, whether you make money or not. So for me, it's like, huh?
No, go ahead.
Yeah. I say for me, I wanted to make it where it's mutually beneficial. Where once you get in, it covers the time that it's going to take me to get you in a group every week. You get all my accesses to my contracts that I paid a lawyer $1,500 for alone. You get access to all that. You get access to my team. You don't waste money working with the wrong people. And then it's performance-based, so we got to actually close some deals for anybody to get any more money out of the situation.
Because just a contract, just to get a contract from a lawyer, you know, I paid over $1,200.
Exactly. Exactly. Yep. 1,500. It's 1,500.
Yeah. Just to get them to do a contract. That's crazy. So what's the max that somebody can invest? Buy the rest shares,
yeah,
right?
nah, only 10,000. That's all you can invest because it's SEC regulated. Yeah, $10,000 per person.
Ah,
So
okay.
yeah,
Okay.
that's the downside of it. If you have people that have big pots of money, they can't invest any
Right.
more than that in this on this type of platform.
Okay. So I mean, you guys are heavily regulated.
Yeah,
So
everything's SEC regulated. I mean, they monitor it monthly, you know, so there is no cutting corners. It's nothing that I could do to do anything in a gray area because
right.
they're watching.
So of course, this is a legitimate deal. You know,
Right.
they're SSC regulated. Plus, you know, you have obviously you have work in the confinements of what their regulations are, obviously. But who like, you know, when someone sends their money in, where does it go, Chris?
Okay, so it goes to a third-party management platform. So that buytheblock.com is not my website. That is a third-party platform that's underwritten and approved by the SEC to host campaigns for projects. Okay, so that's where the money goes. They hold it, and they don't release it to me until everything's been vetted and everything's been documented, so that everyone that's invested gets their share certificates. Everything is their investments are registered with the SEC, and then the money is released to the LLC that owns the project.
So someone said buying the way of $10,000. So yeah, you say the max is $10,000. That's per regulations. Been investing for 8 years. I'm just trying to read through these questions. You can answer any of them that you see, Chris. Let's see, man. Time. No, you can't buy overtime. Only 60 days. 60 days to buy, right, Chris?
Right.
That's it, right? 60 days. But overall, man, like I say, just whatever your limit is, even if it's 5 shares, period. Get involved in real estate, man. I can just it's Chris's hours. I ain't.
No. I mean, you're right. I mean, some people buy. You can buy real estate investment trust shares, which is the big boys that do the same thing. You can buy that on a stock exchange. Just buy stock in that.
What's the difference between you and a stock? Stock market's falling right now. If I were invested, in you, what would be the difference? If stock is falling.
Well, here's the difference. So if you invested in stock in a real estate investment trust, they own a lot of big commercial things. That means they own hotels, they own malls, they own all that stuff right now, right? So you can imagine what's happening to them. The malls are closed, nobody's staying in hotels, so those investments are plummeting, right? The value of those investments are plummeting. Whereas what we're doing is it was conservative, it's residential, it's still got stable cash flow right now. The tenants are still paying. So I mean that's the only big difference. And once again, it's one of those things where when you invest in those, they make the decisions on everything. You don't know what specific project you're investing in. They're not going to tell you until after they bought it. By the way, we bought this. This is the return on it. So that's really
exactly what you're buying in right now.
Right.
Okay. Let's say, Tony, do you just go back to block, Chris? Memphis Facts. What can we DM with questions? You can DM right now with questions. You can also DM Chris. Chris, put your.
It's at the top. It's at the very top, right under your name. _INVSTR. I'll type it in just to be.
Yeah. Type it in, man. Yeah. So definitely want folks to get the questions answered. And when they go back to block.com, could they answer? Is there profile where they can ask questions?
Yeah, they can submit questions on there, and it's a long campaign page that talks about the project in detail. It's got videos, it's got pictures, it explains everything.
Right, because some folks have never invested, Chris. So obviously this is your project. It's your baby. And you're trying to see it, come to fruition. But why should people invest in you? Why should people invest in this?
Man, the number one thing I tell people all the time is if you want to get into an industry, it don't have to be me, but just make sure you're investing with someone that has a proven track record of success. And I make sure that I put everything out there Like you can go to my page, you can drive by my projects, you can knock on the door and talk to my buyers. You can
They real projects.
they real, they real. I post my students on my page. You can DM them and ask them if they really made money with me. You know, so it's not about really investing in me. I just try to be a vehicle for people, because I remember what it was like when I got started and I couldn't find mentors or people that wanted to give me the game really. So that's my whole goal, is to help them. I'm not going to beg you to do anything. I'm not going to convince you to do anything. I want you to see what I'm doing, and if you have interest in being a part of it, then choose that on your own. But I'm not going to be running ads. I'm not going to be begging for offering. I'm not, none of that.
Right.
I don't need any of that.
Amen. So, hey, Chris, someone says, I mean, it's a good question. So, can I invest as a Canadian citizen?
Yes, actually, you can. Actually, you can. Anybody can buy shares. Most countries are able to invest in U.S. crowdfunds. So I know for Canada for sure. We've had people that invested from countries in Africa.
Right.
I've had some people from the islands invest in the project. Yeah. So.
Okay. With the one-on-one, does profit sharing work on your buy and hold strategy?
Does the profit share?
I don't know exactly what that. I mean, does profit sharing work buy and hold strategy? You see it? I am Shannon Stevens.
Yeah, with the one-on-one, how does profit sharing work? Oh, I think she's talking about the split.
Okay.
Yeah, that's a little bit different. So if you just want to buy rental properties, then we can talk on the sideline, and I'll just, it'll be more like a time commitment thing for me to help you evaluate which deals you want to buy if you want to just keep rental properties. Yeah, that's pretty much it.
Yeah, because you're. I mean, obviously the mentoring, you're like involved like on a weekly basis or something, right?
Yeah.
Every day.
Right.
Because I know you got a lot going on. You can only commit a certain amount of time to a certain amount of people. So is that typically a group thing or a one-on-one thing, or how does it work? Especially with folks, how does it work even with folks out of Texas?
Yeah. So everything is done through Zoom calls. So even if I have an in-person meetup, I still got the camera running for Zoom so people can tap in remotely. And everything's recorded. Like anybody that joins now, they can go back to my Dropbox folder for the private group, and they can watch every video from week one and get caught up, So everything is documented, yeah.
So even if you get somebody now, it can go back to the conception. Okay.
Exactly.
So man, you got all this going on, brother. When your book coming out?
That's what I'm working. I gotta have time, man. I already have the outline for the book and everything. It's just, bro, it takes time because it takes time to get it right. You know what I mean? I want to make sure the first one is the right one. I know y'all wrote a book. How was that process for y'all?
We just released the book. It's Wholesaling for Profits. It just it's on Amazon, Barnes and Noble. It just came out last week. The process, I mean, it's easy for me. I'm a writer. So, but it's basically over 10 basic steps of wholesaling. Also, I'm fortunate enough, I've been invited, I just wrote a book with Les Brown. I mean, I just wrote a chapter, I'm sorry.
In
their book.
Yeah.
And their book should be out by November.
Okay.
And I'm working on my own, as well. It should be done by the beginning of the summer. So,
nice.
But this quarantine time has afforded me the time to do that. So, but keeping my mind still on real estate, some of the restaurants and bars and everything I'm invested in right now during this quarantine is down. But we got to keep that optimistic and positive mindset. So we got to keep going, doing stuff like this, communicating with bosses like you, and just kind of, see what you guys got going on and how can we be a part of it.
Right. So, Likewise, man, I feel like everybody, especially in my circle, everybody's really doing powerful motivational things. And there's no crabs in the bucket. Everybody's like feeding off of each other, learning from each other, man.
And that's what it's about.
Yeah, definitely. 100%.
That's what it's about. You know what, Chris? I mean, what's funny is like, I used to probably 2 or 3 CPAs ago. I used to have a CPA every single Sunday. They get, whether his son, his brother, and just like some other business associate, every single Sunday they get on a conference call. We don't do that.
Yeah, we need to do that, man. We really need to do that. We really
need crabs in the bucket, man.
Yeah,
push each other up.
Right. So, right. Yeah. I mean, there's too much opportunity out here, man, for us not to do that.
Man, it's crazy, man. I know it's we got 5 minutes, but I know, like, I'm just honored that you give me your time. I see you on different platforms, talking to different folks about your project and everything. And for me, I've been passively investing in real estate for a while. I've been aggressive, I guess, these last 3 years, and now I kind of, getting into different avenues of real estate. Like I said, lending, flipping, which I've never really done before. I've only been doing since this year. Of course.
Oh, really? I didn't know that, bro. I didn't know that.
Yeah, I know, right? People just assume that I've been doing it for a long time. So, but I'm honored, man. I really appreciate you.
Likewise, man. I appreciate the thoroughness. Hopefully both of our audiences get to watch this over the next 24 hours and get some value out of it.
Absolutely, man. Follow this brother. You got your Instagram handle again.
Yeah, I put it in there. Yeah.
Invest Chris, buytheblock.com. That's an easy way to invest in real estate without leaving your quarantine house.
Right.
So it's a project that's really going on. Do you ever do, I don't know if you're on YouTube or not, Chris. Do you ever show images of your projects and what's actually really going on?
I do have some YouTube. I got to be more active on it, but all of the current projects are on there in some capacity.
Okay.
So they can go out there and check them out. So if you just look up my name, Chris Senegal, it'll come up on YouTube.
But like for example, on buytheblock.com, if I'm typing on buytheblock.com, can I see what I'm investing in?
Yes.
Projects.
Yes. So like I said, it's a platform and there's going to be other campaigns on there, but you'll see mine. It's Lyons Avenue. It's going to say buying back historic Fifth Ward. And you click on that one. Yeah. And when you go through there's videos on there. There's pictures, there's long descriptions. There's a PowerPoint deck on the project in there. There's all the documents as the SEC regulates that we have on there is also on there. And then on my YouTube, like I said, I got videos on everything. It's probably 20 or 30 videos on there.
What's your YouTube? Is this Chris Senegal?
Yeah, just look up my name, or if you go to my Instagram page, at the top in my story highlight, I have one that says watch and it says YouTube, and you can just click there and it'll bring you straight to the page.
Okay, so just to clarify, I know I don't want to take too much of your time, but you got you got this major project going on that folks can buy into for pennies. You got the mentoring program going on. What else you got going on, Chris?
Man, those are the main things: the mentorship, the monthly membership, and and the investment pool.
And that's $37 a month.
$37 a month, man. I wanted to make sure it was affordable for everybody.
Like $37, you couldn't do 100, man.
No, man. people have budgets, man. So I'm trying to help everybody. So,
that's what's up, man. That's definitely commendable and respectable, man. We are all in the real estate industry, aspiring to do things like this, especially in places that we're from. Are you from Fifth Ward?
I'm from Port Arthur, Texas, but it just the neighborhood just reminds me of home.
Oh, okay. And it's a good location. It's close to downtown.
Right. Exactly.
Right. Yeah. That's what's up, man. Well, again, I'm Tony B for Profits on Instagram. Like Chris Senegal, the one and only. Who speaks around the globe. As far as I'm concerned. But major projects going on, man. I really appreciate the time. Really respect you doing this with me. It's my first one, man. It's my first one.
I know. So don't forget, bro. You did well, bro. Remember when you hit end video, click share. Well, first at the top, click the button that says download or save. It's gonna be in the top left corner.
Okay.
Then at the bottom, click share video, so everybody can catch this for the next 24 hours at least.
All right, cool. That's what's up, man. Yeah. And so everybody say you the truth, Chris.
I appreciate it.
_DC_22 says you the truth. Definitely, I agree with that. So. So we'll see you guys again. Someone asked what's the book? Wholesaling for Profits. So that's it, guys. Appreciate you, Chris. And
likewise, man.
Do another one soon, man.
Yes, sir. Okay. Talk to you later.
All right, brother. All right.